As the financial industry has grown, so too has the financial media. Advertisers, PR consultants, journalists, financial influencers and so on, all are vying for our attention. Karen Dolan, Global Head of Marketing at Dimensional Fund Advisors, says investors need to become discerning consumers of the media. Yes, it can sometimes be helpful, but much of the time its primary motive is to sell us something.
Advertising in the financial services industry and investment management is rampant. We see it all over the place, whether you turn on the television or now digitally. We hear from asset managers through advertising all the time. What I have observed is that I think the advertising that I see is usually about a product. It's typically a flavor of the day. There's a ticker symbol, there's a theme, there is something that unfortunately I see is feeding into a bit of the fear and greed that people might have depending on what the flavor is. And so I do think that while there is a lot of fun advertising out there, and I can't say that all of it is not good, but I don't know how much of it's actually leading to the right behaviors and leading to sort of helping investors be good long-term investors versus having a product to push and a product to market and sell. It's not about a 5-year return. It's not about the theme of the day. I think those are actually taking our eye off the ball of what really matters, which is having a point of view, having a philosophy, knowing that there is uncertainty out there and that you're going to have to be able to withstand market volatility. And that's just really hard to convey in a short advertisement. And so I think people ought to be somewhat skeptical of some of the advertising that they see out there and maybe more tuned into things that are more educational and help them better understand, more deeply consider what it is that they're investing in.
It's not just fund providers that have big budgets for PR and advertising. In recent years, trading apps and websites in particular have invested heavily in promoting their services. But the messages they convey aren't necessarily helpful.
Well, I think a lot of the technology innovation on the whole is very promising. With a lot of the advent of new technologies and apps and things where it gives you kind of instant and easy access, the good parts are that it's very accessible, it's easy to get started, and getting started is half the battle, right? So it's really good for people to be able to get in there and get going. And it makes it fun. Who doesn't want to have fun with a scary topic like investing? However, that's where I think the double-edged sword comes in. Because investing inherently isn't a game. It's not a casino. It's not short-term feeding off the entertainment value that I think a lot of our technologies these days do very well. I think that it's a real double-edged sword. And while I love that it's opened and made this topic more accessible and getting more younger investors in, I do worry that sometimes it may not be necessarily helping establish the right habits or the best habits for long-term investing. So topics like long-term thinking and diversification and staying in your seat, those are hard to make fun.
What about journalism? Well, there are some very good investment journalists out there, but there's a tendency among some financial news outlets to focus on market volatility. When markets have fallen sharply, Karen says, some investors may be better off avoiding financial news altogether.
When you're in the middle of a big market downturn, or likewise, a lot of craze about something that's going really well, maybe it's a set of few stocks. We've seen that recently. I think taking a step back, considering what does that mean for your long-term plan, avoiding the temptation to act, because the reality is, say it's a crisis and markets are down a lot and you do get out, you're then going to have to make a decision of getting back in. And that is a very hard thing to time. It's been researched many times over, and not professionals can't even do that reliably. Ideally, thinking about that downturn before you encounter it, because you will encounter it. David Booth likes to say, if you live long enough, you're going to have many of these, so consider yourself lucky. Considering it well in advance, being prepared for it when it happens to avoid kind of the temptation to make a big move. Certainly in the moment. And I like to remind myself in the moment when, let's say stock prices have dropped by a lot, that actually means that expected returns just went up. you've paid for the risk, you just got the hit. You might as well stick around for the return. And so those are things that I have to remind myself of, and I think other people do as well. It's not easy, it's scary, it's nerve-wracking, but I think over time, if you look at all of the data we have, the longer you can wait it out, the longer you can be as an investor, the more likely you are to get what those long-term averages are. And they've been quite good over time.
These days, of course, investors are more likely to take their cues from social media than from traditional media. There are thousands of financial influencers online. Some, Karen says, are much more helpful than others.
If somebody is truly, genuinely interested in this topic, wants to educate people, is curious, wants to sort of lay all the details out and bring an audience along to help them understand the topic, become more empowered, develop a plan for themselves, that's great. I love that there's more content out there, in the form of podcasts, social, you name it. Where I think it can be a challenge is when people and influencers are attaching their name to a product and aren't necessarily credible in that product. That's where you want to be wary. I mean, think about, the Super Bowl 2022. I think it was like north of $50 million was spent on crypto advertisements and celebrities lending their names to that I think has actually ended up, leading to quite a lot of controversy around it. So I think, again, great to have investing be more central in the conversation, really great to have ways for especially younger people to get up to speed, to learn. But I do think it needs to be about learning, education, laying it all out there. I think when there are conflicts of interest, they need to be shown, and that actually there's good regulation that enforces that. Just trying to see, what is it that I can take away from the influencer that helps me figure out what's right for me, and not necessarily what product or shiny thing might I need to buy.
The key thing then is to choose your sources of information and opinion carefully, whether it's journalists, authors, or social influencers. For Karen Dolan, it's also important to be honest with yourself about the uncertain nature of investing. That uncertainty is something that every investor has to come to terms with.
There is uncertainty with investing. It is unavoidable. That is a big reason why you have reward there for doing it. If it were riskless, there would be no money to be made, right, in terms of an investment return. And so when you're dealing with a lot of uncertainty, I think that the tendency may be to want to sort of pass off that uncertainty and say, you know what, I don't know what's going on in markets. I don't know what to invest in. Let me hire an expert, right? We do that in a lot of areas of our lives. However, I think that uncertainty is still there. Nobody can take it away. It's not that you know more about a company or about a specific market or a specific theme that you can take that uncertainty away. So it's, we can't shortcut that part. So I do think that, being really honest with ourselves, and as an investor, being really honest with yourself about, if I'm going to be investing, I have to be prepared for the ups and downs. I have to assume a certain level of uncertainty. Nobody can make that go away from me. And I do think, having an eye toward when you see marketing materials or advertising, just not letting that uncertainty disappear in terms of what the conversation needs to be.
To summarize, the financial media can be helpful, but often there's an agenda to sell you something. Trading apps and websites have both a positive and a negative impact. The media's emphasis on market volatility can be a distraction for long-term investors. And some financial influencers, especially celebrities, can lead consumers astray. Ultimately, you need to embrace the fact that whichever products you use and whoever's opinions you pay attention to, uncertainty in investing is unavoidable. Thank you to Karen Dolan and to you for watching.